What's up, everyone? So today I have a long video. It's been a crazy week, crazy 2 weeks. A lot of volatility, a lot of volume, a lot of movement. It's been exciting, up and down. On the left, you can see the list I have for today's video. I got Boeing, Tesla, Facebook, Apple, Home Depot, the SPY, Dow, and Nasdaq. I got those Boeing and Tesla, manufacturers, Home Depot, supplies, and then two techs with Facebook and Apple. And then I'm going to touch into the SPY, Dow, and Nasdaq. Overall, this video, I just want to go over what's happened in the last week and also just kind of touch into last Thursday and Friday when this started moving. Like, you could have seen this kind of coming. It's been interesting. A lot of people have been saying for the last 2 months, like, oh, stock market crash, another second crash, another drop. It's economy's like this. It's going to come down again. And with the 7% drop or 7% red day on Thursday, they started going crazy. Like, oh, I called it. But it's like a little correction. It's a reaction to Jay Powell. You could say that the value of the dollar was too low. You could say it's the cases. There's a lot of factors. Simply, I'm gonna just go over the chart and kind of give my opinion, my look into this, and then see where this goes. I'm gonna kind of just go over the 1 year chart for each one, just to give an idea of the angles. Now, when I talk about angles, it's just like an angle reading for the buyers and sellers, right? It doesn't mean like, oh, because it's this angle is going to start to come down. It's because if it's at a certain angle, if it's too high, there's too many buyers. And if it's too low, then it's too many sellers. So I just call it an angle, and just as a simple way to look at too many buyers and too many sellers, right? So this is what I want to talk about today. We got Boeing and Tesla, manufacturers, right? Or, you know what I mean. Boeing, you see how for the last year it stays within a certain share value, and then of course what will happen, you got a drop, and then you got a spike, and then a fluctuation, and then you got another spike, and then now it's coming down. And with this last spike right here, people getting happy that, oh, we're opening back up, economy's opening back up, sweet, and that's what it was. And then it started to come down, and now it's like, oh, stock market crash. Like, no, it's a correction. It's a lot of people bought in. The news hit, like, oh, we're going back to work. Work is picking up, and so just because this came down doesn't mean it's a stock market crash, but there's a lot of buyers, a lot of sellers. Buyers are here in this range. They were waiting for this run up. Boom, saw it. People started selling off. More people were like, okay, well, I'm gonna start locking in my profit. And then after this dip, here, let me put the 5-day chart. Actually, 1 month. I'll zoom in. If you've seen my last video covering Boeing, you'll see that I was showing my view that we were kind of due for after that run up. When the weekend that a lot of states were opened up already. If you saw my last video, you'll see that I put a trending line that we were moving up a lot like this. And that was a really high angle, a lot of buyers. Excuse me. And we were due for a little correction. Now, I didn't expect it to be this kind of correction or this kind of movement back down, but I was anticipating it. So I was anticipating more like a side step, but this thing just kind of like sold off a lot, and that was interesting. I believe that was because the kind of guidance Jay Powell gave towards a long recovery. And it's not bad. It's just gonna take time. So too many people started buying and started getting too happy. I guess not with this kind of industry. People didn't start buying in right away and get too happy. That was more like a tech thing, right? So if it did more of a kind of this, let me see 1 second. If it did this kind of recovery, the share or the company, this would be stable, this would be healthy. You wouldn't get this kind of drop right here. But from one week one rally just like that, or 2 weeks, if you want to call it, you had this rally, it's just you're gonna have a sell off. And if it sticks around like this kind of buy-in, then it would have been a healthy climb. But too many people bought in at once, and it just started selling off a week later. So yeah, I sold my share of Boeing right at like I believe 190 something. Um, yeah, once kind of like waited a little too long. I should have when I was talking about the angle, I should have let go these prices up here. But now it did this bounce, and now it's coming back up, and it doesn't mean it's gonna keep climbing, but just give me 1 second. Just be aware that it's gonna take time for it to like have a steady climb. So if you see the support line, that purple line right there, this is what you want. Now the share value, it just did this right here, right? Now it's just gonna fluctuate up and down, but this is what you want right here for a real recovery on the share value of the company. It's it's progress. But in this last week, too many people bought in, and now let's see, just do this again. You got that angle right here, right? So yeah, of course you're gonna have a sell off, and then yeah. So it doesn't mean it's a market crash. If anything, I just see it as a correction. Um, it's pretty wild. It was a pretty big move. If anything, Tesla was definitely due for a correction. If you look at their chart, look at the purple line, their trending line. Yeah. So I think in beginning of February, it just started to really move. Oh, just yeah, the last day of January. So yeah, at the beginning of the year, it just started actually actually December it started to move. The beginning of the year, you can just see it had a crazy run up. This was all because of analysts giving a $1,500 to $7,000 um, price target, and people were like, "Oh, I want that. I want to buy in before it even reaches that." Right? So yeah, a lot of people bought in, went to 900. If you're watching in pre-market, this actually hit like 980, but in pre-market it was just selling off like crazy, and then it came back down to like 700 or yeah. In pre-market it was 700. This was a crazy week. This I bought in like at 650, and then when I saw it go to 900, I was like, dang, I'm really gonna hold until 1500. But that's when I got a reality check, and it just came back down. And it had another run up, and I was selling like somewhere right here in the middle. I didn't know I was gonna go back up to like the 900s. I think the first time it hits around nine. Oh my bad, sorry. The first time it did hit like the 920s in pre-market. Second time around, it came up, it hit to like the 980, like 960, maybe close to 980. I remember very vaguely, but and then it started selling off because of what's going on, and then a lot of people started to buy back in. I'm pretty sure there's just whoever bought it in these prices and didn't sell when it was coming back down. This was the opportunity to sell again. Now it doesn't mean that this thing's going to come back down to 300, but if you look at the moving average, it's starting to take a turn, like, and the share value is starting to follow it. So I think Tesla's up for a correction. I got myself two put options. The first one I didn't get it the day of when it hits over 1,000. Oh shoot! Give me 1 second. I didn't get. I saw this when I saw this jump. It was wild. Elon tweeted to make to start the production of the semis, and the market went crazy. Like, oh, let's buy in. But look at this day. This was a crazy run. That was a good time to buy a put option. I didn't get mine until the next morning when it went down under 1,000, and then it came back up. I got mine like at just about 1,000, and I should have gotten a second one right here, but it was just like a $30 difference for the put option, so I didn't really miss out too much. Once it started coming down, it started gaining a lot of value, and it's just been correcting itself. This doesn't mean it's contributing to a market crash. If anything, it's just another correction. Because if you look at their 5-year chart, look at this. You got this stable share value, right? It seems like Tesla doesn't do anything, but they've been saying what they're going to be doing for in the future, right? Like for their progress and what they're going to be putting out. And yeah, everyone got excited. started buying in. They see the potential. They see that they're bringing in money now, and then boom, sell off because of what's happening. And a lot of people got excited and started buying back in. Oh, like I missed this share value up here. I'll buy in, and then once it gets up here, I'll have the shares at a cheap price. But look at this right here. This is getting really ahead of itself. If you look at the moving average, is down here, and I anticipate Tesla coming back down close to 800. The put options I'm holding are, my first one was a 795 strike price, and cost me, how much did it cost me? I believe cost me 190, close to 200. I sold it for 750 before the market closed, not the 12th but the 11th. I think I sold it right here, and once I sold it, I was like, okay, it's gonna bounce. Sure enough, it bounced, and then I got my second put option. I used the profit from the first put option to get myself a free put option for this, in case another drop. So once I got it before the market closed, oh sorry, this is all okay. No, sorry, it was over here. It was not. No, I sold it somewhere like right here. And then I bought myself the put option right there. It was like buy and sell at the same, in the same hour. It was like right here. I'm trying to remember exactly the price. Well, the point is that I got myself a put option right at like the near 1,000 share value. Next day I sold it, and oh no. Okay, here's what happened. It hit the 1,000. Next day it was coming below 1,000, and then when I saw it come back up to the 1,000, I got the put option, and I didn't want to do a same day trade, so I sold it the next day when it hit this price, and at the same time I used that profit to buy myself a free put option, and I'm just holding that one because it doesn't expire until June 26th. And that one, my first one was a 795, my second one's a 700, and that's what I wanted to buy. I didn't want to use any of my first investment, so I'm just gonna hold that simply because just looking at this share value, it's gonna probably keep coming down. Like if anything, if it comes down close to like mid 850s, I'm gonna let go of the put option. What I'm anticipating is that it's gonna come down below the moving average again. You see these little spikes below the moving average? Right here, boom, boom. It's kind of due for one of those. And if this keeps the same momentum along with the other stocks, it's probably gonna come down below it. So that's what I'm looking at right now. With Facebook, same deal. It got sold off, and then a lot of people bought in, and now it's kind of selling off again. This one's actually staying. It's already dropped below its moving average. They might actually like just. I got a put option on them too, but they might just start to take off again, especially with that partnership with Shopify. It just gives them a lot more like opportunity to profit, and same for Apple, just sold off and bounced, but with techs, they've just been taking off and climbing like crazy. But the thing is that the reason I see a lot of these stocks coming down right now is because we got Q2 coming up. Sorry, excuse me, I had a burp again. But yeah, the reason I see the stocks coming down is because we're coming up towards Q2 reports in beginning July, and now we're mid June, right? If there's a sell-off just for up until the beginning of July, then that makes perfect sense. It doesn't mean that it's a market crash. If anything, it's just like a little correction, because if we look at index, or sorry, like the SPY, Dow, or the NASDAQ, and we put it on 5 years, right? So we do have, let me get a trending line. So we did have the outbreak, what was going on, right? And the bottom was, you can see the bottom right there in the middle. But if you look, Q1 didn't get affected all that much. So for it to have a share value, that kind of share value, cool. If anything, now it's overbought, and I'm kind of anticipating it to be lower than, like that line I have drawn is for a Q1 kind of hit towards the company. Now for Q2, this is what I'm anticipating is a, one second, for them, oh man, they're a tech company. It's gonna be hard for them to come down. If anything, they'll just keep climbing up. But if anything, a quarter two, because the stores were closed, is more down here. And this doesn't mean it's gonna have a sharp sell off like the first crash, but I'm anticipating it to just kind of do this for quarter two. Also, because if you look at the moving average right here, I'm trying to zoom in 1 second. Come on. See, like the moving average is still coming down now. I anticipate it to come up, but till then, I feel like it's gonna climb down just for quarter two reports, and then kind of just recover after that, and we'll see where quarter three and quarter four takes us. But yeah, so for right now, I got all these right here. You see on my left, I have put options for all of them, just expiring close to the end of the month or beginning of July. I'm just trying to kind of ride the trend. For the last 2-3 months, we've seen a climb for most of these, not Boeing, but for most of these. Let me get Tesla. Yeah, see, so for the last 2 months right here, 3 months, it's just been on a climb, right? So, I mean, even if we get a couple weeks of a sell-off, then that's perfectly healthy. Apple, same deal. Last 2 months, it's been on a climb. And if we get a sell-off, then I don't think you should be calling it a market crash, but if anything, just a small correction. And you should be excited. You can buy in at a lower share value. You're not buying the highs. And usually when you do see new highs, then that's kind of a sell-off. Like, that's kind of like a sell indicator. You know, you don't want to be holding at that point, because you know that other people with more shares are going to be selling off, drop the share value, and then boom, you're stuck holding, which isn't bad if you don't watch this every day or every week. The plan is for me that right now, while there's a lot of movement, I just want to kind of capitalize on these movements, and then by the end of the year, quarter three, quarter four, if everything's stabilizing, just kind of moving at a steady pace, steady climb, and good progress on everyone, then I'm gonna hold and just kind of watch contracts maybe every couple weeks, not so often as I do now. But like Home Depot, they're a great company. They're gonna be making progress for a long time. This is their max chart up until like 1990s. You can see that here. That's way too far back, but you can just see that they've been growing for like the last 5 years, right? Or ever since they began, they've been growing a lot. But you see, this is a healthy trending line, like a healthy climb. Of course, you have the market crash. You have that big dip right there on the far right. And then you have everyone buying in because of the potential they have and how useful they were in this market crash. Everyone had home improvements, things to do around the house, spend a lot of time at home and building up, touching up, a lot of stuff to do. Home Depot, of course, benefit from all this. But then again, the share value did spike up. So it's just a little sell-off. People taking in profits that bought in down here. Or even, let's say that people that held from a couple years ago from over here, they're like, oh man, I could have sold it off here before it dipped. And now that it's back up here, they can probably be like, oh, okay, now I'm going to sell. And that's probably what it is. Or, this could all be a reaction towards Jay Powell cases, the value of the dollar, pretty much everything going on. It can all be factoring in right now. Or, in a couple of weeks, we'll be seeing this taking off, and then we'll be like, oh, okay, it wasn't none of this at all. So this is overall for each of these stocks right here, the individual ones. Tech, I'm going to see a slight drop, and then like industries like Boeing, Tesla, and Home Depot might see like a slightly bigger drop. What I did want to touch up on is that Boeing's been kind of giving us a look into what might be coming in next. Last week, Boeing started selling off on Friday before this whole beginning of the week started happening. Because last week it did hit its not all-time high, but in this last couple months, it hit a new high for itself. It had a crazy run up. And Boeing started selling off on Friday. Oh shoot, I gotta Oh, what's Friday? I'm all confused here. Tuesday. So okay, shoot, I'm all over the place. So Boeing started selling off Tuesday, and it started selling off way before the rest. So you see this climb down, June 8th, June 9th. June 8th, the highs June 9th started dropping. Now, if you look at like Tesla, it was just starting to climb. It wasn't moving down. It just started to take off. Of course, the news, Facebook, same deal. Boeing's at this point right here, it's already coming down. Everything else is coming up. Home Depot, same deal. It's just staying up. And then when Boeing started coming up towards the end of the week, you see everything is hitting its new lows. You got Tesla hitting its new lows. You got Facebook hitting its new lows. You got Apple hitting its, always just coming off of highs. But the only ones that were up on the last day, like strongly, were like these industries. Tech started to drop last. So on Monday, this is what I'm anticipating. Boeing, whatever Boeing does, the rest is going to do the next day. So for the full day of Friday, Boeing went on like a 10% climb, I believe. So on Monday, if we don't keep getting a correction, this is what I'm anticipating. If it doesn't have another little, that was terrible, kind of climb like this, come on, little line. Okay, whatever. Alright, so if it doesn't do this, if we have another little correction like this, it's gonna be crazy Tuesday. It's just gonna be a complete, I believe it's gonna be a complete correction, like a small like sell off or big sell off. If Boeing comes down on Monday, just expect the rest to start coming down on Tuesday. On Monday, I believe Tesla's gonna jump up. It had a huge sell off. It closed like at 918, and so yeah, Tesla's gonna come up. Tesla's gonna for sure do this. Tesla's gonna do this. Probably hit the 940s again. Facebook's already recovering. It's already did this line, that trending line that I drew on Tesla. It already did it. So if anything, I feel like if Boeing and some of these techs start coming down on Monday, everything's just gonna follow, and it's gonna be the correction that this is pretty much looking like. Because if you look at it day by day, it's like, oh wait, no, we're fine. We're just going up, right? Why are we coming down? I mean, day by day, it doesn't look like it should be happening. But if you look at a long-term chart, like this, everything's up a lot. That's Home Depot. Okay, this is Apple. Look at that, up a lot. It's just climbing and climbing and climbing straight up. So, I mean, does that little correction look bad? No. If I do it to Facebook, same deal. Oh, that was terrible. Oh, that was terrible. Who am I? Okay, so let me move this chart over. 5-year chart, another indicator. If it has a little correction like this, is that bad? No. Looking at it with a longer or a bigger chart, like a 5-year chart, it does not look bad. It looks normal, right? So day by day, yes, it's crazy to see, but if you put it into a bigger perspective, it's the market. It's just the market moving. I did Home Depot. Tesla for sure needs a correction. If you look at this, it's just crazy. I'm gonna hold my put option at least for another week just to see if it kind of comes down a lot and then bounces, and then buy another put, or just kind of see if he announces battery day and then just maintains this kind of share value like this right here. Then that would be perfect. But until then, I feel like quarter 2 is going to bring some stuff down. So same deal, just like I did with the other ones. If there's a small correction like that, is that bad? No, like it's just went straight up. So if it comes down a little bit, looking at it a 5-year chart, it's a different perspective. It's just a little correction. Same with these, with the SPY, with these 3 right here, SPY down in NASDAQ. SPY holding more tech than the Dow. Same deal. You got this going on here, right? So you see that for that one big drop, okay, that's wild. If we saw it more kind of like sidestep, then it's not so crazy. But a quarter two earnings reports that are coming up should probably give us more of this kind of angle. Yeah, so that's not going to be anything crazy. It's just kind of necessary. It's nothing wild. So people calling it a crash are just kind of trying to be, well, in my opinion, people calling it a crash are just saying that, oh, I called it. But I mean, when you see it run up like this, like it just makes sense for it to kind of come down after that kind of run up. Because in a long-term chart, it just looks normal. In a normal week, if we look at this, if we were looking at this yesterday, you'd be like, oh, it's not coming down, or it's not keep coming down. But now that if I show you this chart, it's like, oh, okay, it doesn't look so bad. So yeah, long term, it's kind of makes sense. The only one I really see holding up is going to be the Nasdaq. Nasdaq mainly built up of tech. It's gonna just pretty much be steady, but people like taking profits. The ones holding the big amount of shares, this is a good time for them to sell, right? If you're holding millions of shares and you saw this crazy run up right here, would you not sell just because it might start coming down? Or would you anticipate more of this kind of run up? I mean, if I was holding millions of shares and I saw this, I'd be, okay, that happens, right? So we got quarter two coming up. Not that many sales going on, depending what company you are. But these little drops right here are not crazy. They're, if anything, they're healthy. So pretty much what I'm going to watch for next week or starting Monday is keeping an eye on Boeing. If it continues to climb, then most likely everything else might keep climbing. If it does, here, actually maybe more specific, because I don't want to say that I called something and then it's just vaguely right. Actually, hold on. So if Boeing does this on Monday, I think everything else is going to climb, right? And sure. But if it does this and then the next day it has another sell-off, then it's going to be pretty wild. So actually, let me just kind of keep it simple. If Boeing does this, everything else that was down on Friday, like Tesla and some others, are going to climb. If Boeing does this, and comes back down, then it's going to be interesting on Tuesday. It'll be interesting to see Tesla kind of just recover a little bit and then sell off Tuesday. It'll be interesting to see Facebook sell off. If Facebook sells off a little bit on Tuesday, on Monday, Tuesday is going to be crazy. So Facebook did this, right? So now if it comes down a little bit, it's just going to be kind of a sign or indicator for a sell-off, just for quarter two, not like a market crash, just for quarter two. And then again, let me just make it clear again. See, share values are crazy high. So if you see, I'm just kind of looking at this as a one-day thing, right? My little line I was up there, it just kind of indicates, let me just try closer, come on there. See, all I'm indicating on Monday is if it does something a little bit like this, that doesn't look like anything, right? But to me, that's a sign that we're headed back down. Just kind of, well, that's crazy. That's a crazy call right there. But that's all it is. It's just a kind of an indicator for me that things are going to come back down. Just kind of a correction. But yeah, so that's all I really wanted to talk about today. It's a lot, but there's a lot going on. So yeah, if you're anticipating any of this or kind of seeing the same thing, I hope I kind of covered some stuff you might have already been looking at, put it into a chart, kind of just give you another look. Then sweet. If there's any questions you have of what I've brought up or anything that you want me to talk about, leave it in the comments. I can kind of get into it and then see what's going on. Overall, the market, I can't tell which way it's going, but I can kind of, I have my own opinion of where it kind of move towards. just for quarter two. So it'll be interesting. I think we're all excited for next week. Hopefully you didn't buy the spikes, you didn't buy any highs, and if you did, just wait. Quarter three and quarter four are going to be pretty promising, but for right now, there's a lot of movement, a lot of uncertainty, so it's going to be interesting. But then again, none of this is financial advice. Please do your own due diligence, and trust your own investment. So thank you for watching. Thanks for tuning in, and I'll see you all in the next one.